You're watching Masters in Trading Live with Jonathan Rose.
Hey guys, it's Jonathan. Welcome to Masters in Trading Live. Today I want to talk about something that is so important, especially with volatility rising. We're going to talk about tying down your risk. For those who have been following me, I've been putting out videos for 10 years now on YouTube. There's a ton of videos about tying down your risk. People say that buying options is scary. You know what's scary, guys? Sitting long stock. Sitting long stock is way more risk than trading options. So today, I'm going to walk you through a bunch of examples, but we're going to talk about when volatility picks up, how do we tie down our risk? How do we make sure that we're protected and things don't get too far away from us? That's what I'm going to talk about today. I got the chat open. Welcome, everybody. I'm going to head over to the screen and let's see what we do. Let me start right here before I get into it. Put out a video this week, a really cool discussion between myself and Jeff Remsburg from Investor Place. Plugin gave this really great feedback. I've become prouder and prouder being part of this as I went by. What struck me is if you were as frank and pointed as you are with us every single day. So it's on our YouTube channel. If you haven't got a chance to watch it, please watch it. It really talks about the difference in how we approach the market versus everybody else. Okay. We're talking about tying down risk. Get my pen going. Okay, let me get Mr. Pen here. Okay. Don't trade in the dark. Tie your trade to something that confirms your trade. We want to tie your trade. If you're long the NASDAQ, what other markets? What are they doing? We've been talking about lithium stocks. Well, what's the cash price of lithium doing if you're going to buy lithium stock? Say if you're long AI stocks, you want to confirm the semiconductor ETF is strong. I'm going to get into this. I'm going to show you examples of what we want to do, but we want to tie that risk down. Oh, the challenge. If you haven't gotten the challenge, guys, there it is, investorplace.com/challenge 2025. Tying down our risk. What's the VVIX doing? VVIX, that's going to be the risk of the VIX. How volatile is the VIX? Here's our community. Death stare that VVIX. VVIX is now up to 122.6. Holy VVX. There's concern. Well, let's look at the VVX right now, guys. VVX, last trade, 132.57. Does anybody want to be long? Market's not going higher when the VVIX goes higher. This is what you need to death stare. Look at what's been going on, guys. As this strengthens, the market is going to go down. This is what we talk about of tying down your risk. You need a confirmation. Boom. Now we are bullish. There we are bearish. You need a confirmation in order for the market to rally. Okay, you need that. You need that. Eddie, 1117, we don't have fear yet. What would be fear? 130, 150. Eddie, you getting scared, my guy? Give you a little analogy. It's like buying a restaurant stock. You only want to do it when that restaurant is packed. Anybody want to invest in this restaurant? Or does that seem like a good restaurant to invest in? And this is going to be like the VVIX. VVIX is strong, market's going down. VVIX is weak, market's going higher. So when volatility picks up, I like to call it a seatbelt. We want to tie yourself in. Retail traders make one common mistake. They buy one thing and hope it goes up. They balance some longs, some shorts. So we can take advantage when the market flips, when the market turns. This is the NASDAQ against the S&P. I'm going back 6 months. What's been going on? Look, boom. NASDAQ is super strong relative to the S&Ps. What's going on now? NASDAQ is super weak compared to S&Ps. It's just an AI move. That's what's going on right now. It's got to stay. It's got to stay. Matt, it moves quick. I mean, you can see it right here. It moves quick. And when it gets pounded, well, this is actually the VVIX. Let me go back to the VVIX because it's a really good question. It's like taking a step out. Like here, you get a gap down, but look at this move. The market is not going to be able to rally with this kind of move. So you need sustained trade. So even 105, it's not going to live at 105. Really, this thing is going to live at 85. So if I put this on a daily, it doesn't live above 105. Right? So you need it down. So it's like the first line in the sand, but then confirmation, because you need this thing down. We need it, this whole area, in order for the market to continue to rally, to get back to rally. And it could happen really, really fast, but that's the confirmation that you need. That's where you roll up your sleeves and be a little athletic with it. I love this chart. You got it, Riz. Dude, I love this chart. This chart is called a butterfly. Not sure why I'm writing butterfly, but I'm going to. This is a butterfly. Now, the reason it's a butterfly is because the middle is the NASDAQ. The wings are going to be the S&P, the Dow, and the Russell. The Russell is small caps. So this chart is a butterfly where I'm looking at the NASDAQ relative to the other three right here. This is 2025. This is 2024. This is so freaking cool, guys. Look at this. NASDAQ was really weak in April. Then the NASDAQ got super strong. And it got so strong right here. In 2024, which I thought this was darn freaking cool, it got to the same freaking level. Look at that. This is NASDAQ relative to three other products. When it got here in 2024, it sold off big time. NASDAQ was weak relative to the others. It got back up and tested. Then it went down. Looky here. That's crazy. It traded to the exact same level. And this is just AI stocks, NASDAQ stocks, NASDAQ stocks. This is NASDAQ softening up relative to everything else. I got another chart. This one is just NAS. I wrote it here. No reason to write twice. This is just NAS versus S&P. Again, 2024. Yeah, very cool. Thank you, Laura. It's such a cool chart. I was playing around with it this morning. So the difference between NASDAQ and S&P got to the same level that it did in 2024. Very, very cool. Really interesting to me. If anything, NASDAQ is pulling back. NASDAQ is now kind of cheap relative to the S&Ps, relative to the Russell, etc. So really cool chart. And it just helps put things in perspective where you're not just looking at the NASDAQ, you're looking at the NASDAQ relative to the S&P, relative to the Russell, relative to the Dow, trying to find out where is that weakness, where is that strength. Very cool chart. What about lithium? We talked about lithium, was it last week? We talked about SGML. A lot of people got into SGML, and we got into that. Why? Because lithium was so strong, right? Here was our chart of lithium. This is the cash price of lithium, the actual price of lithium. So when the cash level is super strong, heck, we want to go and try to find opportunities to get long lithium companies. What we did with our SGML trade, I know many of you guys had this trade. We shared this 11:13 when SGML was flying higher. What did we do? We're long the stock from 609, and we sold the 11 strike calls, thinking that SGML will pull back a little bit from 11, and that's exactly what it did. SGML, this is how we're handling our SGML trade, but the takeaway is when lithium cash is strong, we want to be long lithium stocks. When NASDAQ is super strong relative to the S&Ps, that might be a time where the NASDAQ is going to pull back, where you sell the NASDAQ and you buy something else against it. So overall, guys, I don't think options are the one that are risky. I think sitting there long stock in a volatile environment, that's really what's risky. So if you want to be long tech, you want to balance it with other correlated markets. Tech moves faster than the rest. If the market drops, your hedge will keep you in the game. Here's my final slide. When volatility goes up, the swings get bigger. Big swings are going to mean more danger, so we need to tighten our seatbelt. Everything needs to trade relative to something else. So smaller positions, hedges, and we want to be in the trade that is showing strength. I got one more chart for you. We're going to go and look at the overall market. What I always do, guys, I always do a free presentation, and then I switch off to our all access community. Before I do that, I want to go over a couple things. I want to answer some of your questions too. I was out this week. I was traveling. I was in Baltimore. I thought this was really interesting. Looking at the SPY, monthly, we took out last month's low, 652.84. 652.84, and this is support right here, 649. So 650 is your line in the sand for S&Ps. And I got to say right here, here is exactly how I look at this, guys. S&P is right by big support. 650 is big support. The trade that I would look at right now is VVIX. As long as this trades lower, gets down to 125, bullish. If it can get down to 120, bullish. If it can't, not bullish, then we're going down. But this is what you want a death stare. It just rallied. It probably got up to about 133, 132.72. It's trying to sell off a little bit. You have your VIX 9-day that you could watch, but I really think the VVIX is going to be a lot stronger right now. But that SPY, that is a big level, my friends. These are monthly highs and monthly lows. We just took out last month's low. Now we are above last month's low. And then 2 months ago or 3 months ago, the high is going to be 650. I think that this is going to be the low of the day. I wouldn't be surprised if we rallied for the rest of the day. Make sure you hit that like button, everybody. What I'm going to do now is I'm going to hop off. For everybody in our all access, we're going to go over some of our open positions because it's Expiration Friday. Make sure you hit that like button. Thank you so much for watching. I'll see you guys live Monday, 11 a.m. Eastern time. Everybody in all access, you guys hang tight. We'll be right back. Hello, everybody. This video is going to be for all access right now.